Okay, so I'm currently short in EURUSD, and this has been a bit of a messy trade. I got into this at the beginning of the week on Monday, and we've just been in this choppy mess all week. Unfortunately, I've had quite a busy week, so my trade setup this week has been my analysis at the beginning of the week on Monday, and then I basically got into a couple of trades on Monday and I've left them for the week, and I haven't been able to manage them or observe them as much as I would have liked to have done this week. So I'm just having a look at them now, and I'm aware that EURUSD has been really up and down, very difficult to trade, and in hindsight wasn't the best trade to get into, but I was already short in that. So as you can see, I've really taken a 0.01 position size here for EURUSD, and I actually got into this on the 24th on the Monday around about 5 o'clock. So I believe it was around this candle here, and I got into this as we came back here for this sort of pullback, grabbing liquidity in this area, and I believed we were going to drop and work our way down. If you saw my previous video, I'll put a link above, but I did short this last week where I got an entry here and I rode this movement down. Unfortunately, I only got out of that trade about here, so I missed this second step, and I thought I could try to capture some of that this week, but it looks like it needed some more time to actually pull back, consolidate, do its thing, but it hasn't even really been ranging because we've not had any clear and top and bottom points, so it's just been quite a difficult, choppy price action here to trade. And what I've done, my original stop for this red dotted line here was actually around about this level up here, but I've actually reduced that to risk 0.5% of my account because of this choppiness. And I've loaded this up now to show you guys because I was going to cut this what I consider a losing trade, but it's actually starting to move again now, so I'm just observing it because I've got a trend line drawn on my other chart here in the 4 hour, just connecting these open and closing candles here in this bottom swing low point, and I'm looking for some sort of resistance around this 98 mark, and I'm expecting it's probably going to bounce back up to test the upper part of this. But because we've been in this consolidation all week, I mean, I really want to follow my trade plan here. I really want to see it through, but my mind is telling me to manage my risk and to cut my losses, or in this case a small winner. It doesn't follow my plan. It's void. We're in this choppy market. The safest thing to do to preserve my account would probably be to just get out of this trade, watch it, and wait for a clear breakout either to the upside or the downside, and then look for a trade. And that's what I'm thinking of doing. But now I'm saying all this to you guys, and right now I'm obviously watching this. I'm watching it as it's starting to make a move back down here, and I'm sort of wondering, where's the best place to cut this? Where do I get out? I don't want to get out now if it's going to then go down and give me some more profit. So I'm observing it around the whole pound mark. I think when it gets to 1.1800 is probably where I'm looking to cut it, because we have seen some resistance at that level, and usually the whole pound does tend to provide like a support and resistance zone. So I'm thinking of actually bailing out of this trade at that point, because I think the risk here is we could be consolidating for ages. It can go back up to the upside, and it's just not worth it really. So while I'm waiting for that to sort itself out, just say hello guys. If you're new to the channel, my name's Emily, and on Mindfully Trading I share trading videos, sharing my journey, my personal journey as I learn and grow as a trader. I've been trading Forex live now for about 4 months, and you can check out all my other videos, my different weekly, monthly recaps on my channel, so be sure to check those out and see what you think. And in this video, I'm just going to share a breakdown of the trade that I have closed for this week. And then obviously I am currently in this trade short on EURUSD. So I'm just going to see how this evolves. So let's get into it. So as this continues to just sell off a little bit, let's jump into my account history with you guys. And what I'm focusing on is this one right at the top. This is the one trade that I have actually closed for the week, which was another short trade on the New Zealand dollar to the US dollar, only risking 0.01 position size as per my risk management parameters. And I basically got into this risking 50 pips to make 100 pips, and unfortunately that hit my stop. Wasn't the best trade, and I took just under a 1% loss on the account, so minus £3.80, but I did hold it for Monday and Tuesday night, so I believe some the financing has come out for that, but they are merely pennies. So altogether, minus £3.86 there, so just under 1%. And I'm going to load the chart up for that losing trade and break that down with you, but obviously I'm just keeping an eye on Euro USD. Now, when I had a look at my charts last night, as I said, I've had a very busy week, but when I looked last night for Euro USD, I got into this trade, as I said before, around about this point here on the Monday. So I've actually held it through this choppy action here. And now this red candle yesterday, around about midday, actually came to this red horizontal line here. And that represents a 1% mark on this chart. So at this point, this is where I got to what I was risking on this trade. And if I was at the charts at that moment in time and saw that, I probably would have cut my trade then, because we've had such a choppy price action here. I think that would have been a good place to cut it, because I would have still made 1% on the account. If it was a larger position size, I probably would have taken half the profit off at that point and then set the remainder to break even. But with a 0.01 lot size, I don't really see the point at the moment in cutting that half, because I mean, I'm only getting pennies anyway. I'm not too interested really in cutting position size in. I'm just more interested in getting in and getting out, and more importantly, getting green and consistent. So in that effort, that being said, I would have liked to have gotten out here. Now, because we are moving down here, I'm just going to jump to the hourly, even though I have taken this trade on the 4-hourly chart, so it is a long-term trade, swing trade for this week. We have broken underneath the 20 moving average. I've been trying to focus more on price action, but I still find that the moving averages do present support and resistance, or at least they have for me. And I think it's because people do use them and they provide, if anything else, the psychological levels of support and resistance. So because of that, I do tend to include those on my charts. And on the 4-hourly here, you can see that we are getting a strong bearish candle. We've got 10 minutes left of the hour and it is coming down quite strong. So I am tempted to leave that. I don't want to cut that while we're actually moving in my direction. I'd like to try and get as much of this as possible. I'm thinking we might come to this 0.1786 level, because we've seen quite a few taps of this level in this area, and then obviously these two candles here close there. So I'm sort of watching around that level as well. But if we can get the move down to this 0.1772 area, it'd be very nice to cut this with 1%, which I know we're not supposed to be revenge trading, but logistically it would cancel out this other loss and give me break even on the week. But I don't want to expect it to get to that out of a desire to win back what I've lost. I'm just watching this and trying to find the best place to cut this loser. And I'm experiencing quite different emotions here talking about cutting a trade, because it's when it starts moving in the direction that I want it to, my mind starts coming back and saying I should be following my plan, I should just let it work. But I have to keep reminding myself that I did get into this trade quite far back now. And this is just the 30-minute chart that I'm looking at. I'm just sort of seeing what's going on in the different time frames. But I did get into this trade way back in this movement here. So I've held it throughout this very unpredictable choppy price action. And I think until it breaks this horizontal line, there's no clear direction of what's going on. So I'm probably safer getting out and then getting back in after a breakout. But if it does come down here, it could be making an inverted cup, and then I could possibly wait for a handle to move lower, but that's not my strategy. That's just something I've been watching throughout my time as I've been trading. So it's not enough to confirm staying in the trade. There we go. We've just had the break through there past that 4 mark, which was providing some resistance. Okay, I'm just watching to see as this comes down now. I'm getting ready to just cut this, even though it feels very counterintuitive because it's starting to come down, which is what I wanted to do. So it just seems very odd to be waiting to cut this as it's starting to build more profit. But as I've explained to you guys before, I'm practicing what I know at the moment to be risk management by cutting a choppy trade. In fact, when I was up at this level, I was waiting because I was expecting this sort of resistance mark here. And I was waiting for it to come to my entry. That was my original plan, was to just cut it at my entry break even. So to have gained this move here is good. I just don't want to overstay my welcome if it's going to turn against me, because that is the nature of when it is in this choppy market. So I'm just watching price action here. if we see a lot of resistance at this sort of whole pound mark, then I might just bail out in a moment. And one of the reasons I'm not thinking of staying in this as well, just to show you quickly on the 4-hourly chart, which is what I have used for this trade. Looking at this red candle we're currently in, it's got 2 hours left, so fair enough, it's not finished yet. But at the moment, the volume bars down here is a lot lower than the previous candlestick, which was a doji sort of favouring the upper side rather than the lower side. I'm not really seeing too much strength. I don't want to look too much at the hourly because it's not really what I'm using to gauge this chart. However, we've got more volume again on the green candle, so I'm not really convinced. As I said, until it breaks this point, I'm still considering that it is in this choppiness. We are coming back up here, so I'm going to just close that trade now because it has been going on for days. It's not done what I wanted it to do when I took the trade. I've been in the red more than I've been in the green with that trade. So all of those factors into consideration, I'm actually cut that trade. So I'm just going to make a note of the results of that, ready to load into my spreadsheet, and then I can share with you guys in more detail. I don't know if there's ever the best place to really get in and out of a trade. When it comes to cutting losers, it is quite a tricky one. As I said, I've seen enough reasons why it hasn't worked. I do feel right for getting out of that. It's probably going to come down now and hit my original target. But I feel like there's a very high risk that it will go against me and hit my loss as well. So I'm trying to cut my loser by getting out of a poor trade, basically. And to get out of the trade with a little bit of profit is better than letting it run and hitting my loss, my stop loss. Okay, so just loading up my trade record sheet here. Okay, so I got into this trade. It was actually 4 minutes past 3 on the Monday. EURUSD -1 and 0.01 lot size position there. Risking 1% of my, at the moment of this video, £410 account. So it's not bad for a bailout. At least I've managed to bail out and take a little bit with me. So £1.30. And just looking back onto my review here as to why I took the trade, and I'll load the chart up just to the side as well. So I did my weekly analysis at the beginning of the week, and I could see from the daily chart that we have come down here, and I felt like we are due some pullback more so on the weekly. Perhaps I was relying too much on the larger time frame for this, and this would be a better kind of longer term position to take, not using the 4 hour but maybe focusing more on the daily, because I was very interested in this red candlestick here on the weekly chart, this pin bar, almost a pin bar, even though we have got this lower wick here. We've got this very long upper wick rejecting this level, and it's quite extended on the weekly, so I was sort of trusting that it needs to come back, and to some extent I suppose it is, but it's naturally going to take a long time if I'm using the weekly, which is what I was doing really. The daily, we are in this choppiness here, and to get in the middle of this range is not the best entry, and I can you know, accept that now. I think a better entry would have been at the bottom of this consolidation move here. So, you know, this is a grey area for trading really. But to get in maybe this level here below this red horizontal ray line would then give some movement here for trades. So I can accept that it wasn't the best trade setup. It is why I've cut the trade. I've kind of accepted my poor judgment on that really to get into it in the first place. So I'm saying this to you guys now. Look, it's down at 99. I could have got an extra 5 pips. But as I say, it didn't really follow any strict strategy that I am using, which isn't a good reason to take a trade. I think that slips more into gambling than trading when you're not following a strategy that you've, you know, back-tested, planned out, studied, researched, practiced, all of those things. If you're not following those rules, then it's going to be difficult, and I think that's what I've done for myself with this trade. So I'll just write a few notes in here. And for this, as I've said to you guys before, I've used this concept of breakout or bailout. I've given it a few days. With it being the 4-hourly chart that I've used, I think that have been in this trade for, it's been about 3 days now. It's enough to have expected it to have done something. I think staying in any longer makes it quite risky, especially as the weekend approaches. I don't want to be caught into this choppy trade throughout the weekend. It's too risky on the account. I know it's a really small account, but I'm trading this without thinking about the monetary value because, you know, I want to be, if I decide to add money to this account when I'm ready, then this is how I want to be trading with that. So regardless if I've got £50, £500 or £5,000 in the account, I still want to be treating it like it is the biggest account in the world because I want to make the best decision in the world, and that's why I go into all this detail, even though, you know, we're talking about pounds and it doesn't really matter in the monetary value at the moment. It's more the decision making and the learning and the growth. So if I round that up, I'm basically just down 0.5% on the week, and that is my weekly. Oh, not 50%, that would be pretty bad. And as I mentioned at the beginning of the video, I have also taken a loss this week on New Zealand dollar, and it just wasn't, again, the best trade at all. I got into it. I'll go through it very quickly with you guys. I was going to kind of put it off to another video because I think this is already getting long. But I did say I'll go through it, so I'll explain briefly what I was thinking. So if I just jump to the daily again, as you can see, it's not gone well. But we've had this sort of sideways consolidation here, we've made a move higher here, and then we kind of had this other attempt here where this red pin bar was rejecting this EMA level and horizontal ray here, and we came down. So sort of saw it similar to a head and shoulders. It's not really, because we are missing a bit of this right shoulder, but we had this rejection here. So the reason I was quite interested in this is we had this prior move up to this horizontal ray. We had this clear pin bar on this 4-hourly candle here, and since then we've come down a little pullback and come down some more. So I thought that was showing strength to the downside, and then we were in this little consolidation phase here just underneath the 20 moving average on the 4-hourly chart, and for this area it was mainly these candles here that I was watching and taking my trade entry on, and for that I went into the hourly chart just to see a little bit more of the story of what was going on. And I actually decided to get short at the close of this hourly candle here, and that was because we were consolidating. We had these 3 strong bull candles to the upside, and then we had this red closing candle here, and we had another red candle here. So it was after the close of that I got short, because I knew that it was risky getting into this in consolidation, but given what I was looking at on the larger time frames, I guess I just felt confident that it was going to go down, and I wanted to use this opportunity to get what I considered a higher position for a move down. I was also looking at the volume bars, and we saw quite a lot more volume on the red candles than the green. And then obviously jumping back to the 4-hourly, it was the same situation. This red bearish candle here had a lot higher volume on the volume bars down there than the prior candles. But it didn't go to plan, as these things sometimes do. I got into this, and as you can see, for a little bit of time, we were in the green here. Pretty much this period, we were in the green, but we're consolidating. And I should have probably realised then, after a day or two, that it was taking a bit of time. But sometimes in the past, I've been in a trade that has needed that extra time before it starts to move in my direction. So I didn't really see it as a cause of concern at the time. I was watching this horizontal ray because it had provided previous resistance, so I probably should have been more alert at this candle here, but it was 1 in the morning the Asian time, so I did miss that, and I'd kind of prefer to base it on signals that are from the New York or the London session, because generally they have more volume. But as you can see, I just jumped on the 4-hourly. Basically, you know, it went against me and it started climbing higher and higher, and in hindsight, looking at this area here would have been a good place to have placed the stop, probably above that, because it's a clear area of liquidity. And we've got this period here where candles are crossing and pulling back to and finding strength from and bouncing off or breaking through, and then obviously providing this resistance area, which is what we're seeing in this point here. And my stop, as you can see, was down here, so it wasn't really the best played out stop at all, because if I'd have placed it up here, we would still be in. But obviously I haven't really picked the right place for this. It wasn't a strong trade at all, and that's why it is a loser. So just a brief insight with you guys on the loser on New Zealand dollar and US dollar, and then obviously my very small bailout winner on Euro USD. So I'm finishing the week so far, unless things change. I'm currently down 0.5% on the account. So, you know, it's not ideal, but I'm trying to manage the losers. I'm trying to manage the account, manage risk. You know, it's not all about having those amazing green days, but I think that being able to cut these losers and make these difficult decisions and try to focus more on managing the account is sometimes what helps when you then have the real green days, because, you know, without cutting the losers, you can't really appreciate the green days if you have too many red days. So anyway, I hope it's been a good little insight for you guys on a realistic journey as a beginner trader of the small account. If you've enjoyed it, do drop me a like. Don't forget to subscribe to the account if you're not already subscribed, and I'll catch you on the next video. Thanks, guys. Bye.